that choice for yourself. Before we get into that, I want to start by reading from 12 Habitudes of Highly Successful Traders. This week, I've been reading from different trading books that have made an impact on me or books that I'm going back and reading over. This is a book that I am not currently rereading, but I know that it's got a ton of value in it. So I figured it'd be important for us to share just a little piece here from Chapter 5. Chapter 5 is titled The Habitude of Thinking in Probabilities. Now, this book is a very easy read for any trader. I know Gerber's here this morning. What's up, brother? He's reading this right now. It's super easy to read. It's very small, as you can see. And this is a book, it's kind of like a tactical guide for traders. You can just open this thing up and you're going to be able to read a chapter any day of the week, and it's going to make you think in line with what an exceptional or winning trader would think, more so than a losing trader. So I think it's good to just bring that back to the front of the mind, so to speak. So in Chapter 5, she says the habitude of thinking in probabilities. And you could guess there's 12 chapters because there's 12 habitudes. I don't know if habitude is a real word because it always tries to autocorrect me when I type it places. But I like that she kind of invented it for this book. This is another Ruth Barons Roosevelt book, by the way. So the title here of this chapter is The Habitude of Thinking in Probabilities. The first section in the chapter says, all we have, because that's all we have. She says, oh, we could do remote viewing. We could all call on psychics. We could look to astrology. We could call for divine intervention. We could, and some of us do. Our trading is either in the hands of fate, the gods, guesswork, or probabilities. I prefer probabilities, she says. Even if they're not always probable, not always is the operative word. Patterns occur, but not always. Systems work, but not always. Fundamentals dictate price, but not always. Relax, she says. If there were an always, the game would be over. There's no such thing as tomorrow's Wall Street Journal today. That's why trading on inside information is a crime. Inside information predicts, but not always. Even the crime is not a sure thing. So what can we do? We accept what we have. We think in terms of probabilities and act upon them. We let probabilities be enough for you to go. To go one step further, you would want to even be grateful for probabilities. After all, probabilities are probable. Successful traders think in terms of probabilities. They have put themselves in alignment with probabilities. They grade them. Slightly probable, more probable, highly probable. This is part of where I got the idea of how to grade my setups, knowing that not every trade setup is the same, right? The probabilities vary. They will risk more on high probability trades than on a slightly probable trade. This is where money management or position sizing comes into play. She then goes on to say in this section about self-doubt and self-importance as a distortion of probabilities. This is important. Some people see themselves singled out by some perverse force as destined to fail in trading. These people will buy system after system, course after course, signal group after signal group, only to find that when they start to trade the system, it destructs in ways that it never did in the past. Putting aside the thought that the system could have been curve fitted to the past, what can this person make of this? She says, I've spoken with many thwarted traders who came to believe that they were personally doomed in trading. If they took a trade or traded a method, it would of necessity go against them. To them, it seems as if it always has by an extrapolation, and it always will. Not only have such traders considered themselves doomed in the eyes of the universe, and it may well be that we need to keep an illusion of positive expectations to thrive, they have laid aside probabilities. How could it be probable that if they trade a previously successful methodology, it will enter an unprecedented drawdown? Always? How could it be probable that if they sell, it's the bottom, and that if they buy, it's the top? Always? No, it can't. And that's where probabilities come into play. That's where probabilistic thinking would bail them out. She says, what is likely happening to these traders is that their belief about personal certainty to fail causes them to unconsciously choose those trades or those methods that will not work. It's the belief system that causes them to suffer. This belief causes them to unconsciously filter out good trades and reliable methods. The point that she wants to make here is that if you continue to view your trading through probabilities, through the prism of likelihoods, you will not be able to see yourself isolated by the fates of failure. The belief in probabilities will keep you searching for the key to success. You will sort through probabilities for ways to succeed. Here's a quote from Aristotle. Probable impossibilities are preferred to improbable possibilities. Successful traders know that probabilities are all they have. For these traders, probabilities are enough. Probabilities are actually more than enough. Probabilities mean they will probably succeed. If not now, then later. Probabilities are the safety net. Granted, nets have holes. Nothing is always, but they're still nets. So right there, I just wanted to share that because I think a lot of people get caught up. We talked about it yesterday in their ego, in attaching their value, their self-worth to the outcomes of their trades and not to their process. But I think if you can think in terms of probabilities, the outcomes of the trades get easier to ignore. You don't care if it's a winning trade or a losing trade today, or even this week, or even this month, because you know probabilities tell you, if you're trading a winning system, that you're going to be profitable in the long run if you stick to the rules of that system. For example, Jerome and I did a video for people that take our backtesting course. We did an update video for them like a month ago, maybe 3 weeks ago. And in that update video, Jerome showed if you had jumped in and started trading the A1 entry, which is one of the systems that we teach here, if you had jumped in and just started trading that A1 entry in October of last year, you would have experienced, and this was only on, I think, GBP USD, you would have experienced like 8 losses in a row, maybe 6, something like that. Enough to where a new trader coming in would say, oh, this system doesn't work. But because Jerome was doing months of backtesting, if you looked back just 1 month before October, you would have seen that there was a 13 or 14 trade win streak with 1 break even. So it really, again, the probabilistic thinking determines your success. The system itself should be backtested from an unbiased point of view. But if it is, like I said, as it should be, then it really just comes down to trusting your probabilities and giving the system time to play out. Like I said, if you jumped in October, you would have been mad at the system. If you came in September, you would have been like, this system is fantastic. So it's really important to think in probabilities and make sure the probabilistic thinking is aligned within a winning trading system. And if you don't know what a winning trading system is, that's what we do here at ASFX. I teach you, and the other coaches here at ASFX help me teach new and struggling traders how to implement winning systems into their trading. We have 3 strategies, 3 systems that we teach, the A1, the D1, and the D2. And those 3 strategies are back-tested and proven profitable. So even as we go through some of the trade setups today, even if these trades were to end up as losers today, that wouldn't make me think I need to jump ship and find a new system, because I'm a probabilistic thinker and I trust that in the long term, what's happened in the past should continue to happen in the future for the most part. Nothing is a guarantee. That's the big takeaway here. Nothing is always, nothing is 100%, nothing is guaranteed to win every time you click the button. No system will ever give you that. You shouldn't even be looking for that. You should be looking for a back-tested and proven profitable system in the past that aligns with your beliefs and that you can put into action going forward. So I hope that helps you shift your mindset a little bit to thinking more about probabilities, less about outcomes. Now, let's go into some of the news for the day. So here on Bloomberg, you can see the defense news of this morning. President Joe Biden again defended the handling of the U.S. withdrawal from Afghanistan, saying the deadline was, quote, designed to save Americans' lives. UN Secretary General Antonio Guterres, I think is how you say it, said 18 million people, half of Afghanistan's population, needed humanitarian assistance to survive. Differences are already emerging in Europe over how to handle the expected influx of refugees from the country. In Kabul, the Taliban and other Afghan leaders are said to have reached a consensus on the formation of a new government. That part, I think, is a load of BS. I don't think they're going to be establishing any type of serious government anytime soon there. Let's talk about oil. We know we have the OPEC meetings coming up. OPEC and its allies are expected to agree to increase production by 400,000 barrels per day at today's online meeting. The move would be a continuation of the process of rolling back production cuts introduced in the depths of the COVID-19 crisis. So we'll just see what the meeting comes up with today. We'll read the news this afternoon and see what they say. Going into logistics, data from Europe this morning confirmed that problems in the global supply chains seem to only be getting worse. Factories in the region saw unfilled orders rise to a record high level as logistics problems are proving more stubborn than previously expected. A report from Switzerland showed manufacturers are increasingly adjusting their supply chains to place more orders with European firms. In the US, there are big problems in just getting containers, and then a shortage of drivers to move them around the country, all of which is feeding the cost of finished goods and inflationary pressure that is still seen as transitory. It's not transitory. Prices aren't going back down. And then global markets are pretty quiet this morning. The interesting thing here on the global side of things, there was a report last night out of Israel. For those of you that don't know, Israel is, I think, the highest has the highest vaccination rate out of any country, yet they actually are now leading the world in COVID cases per capita. You can make whatever opinion or whatever decision you want of that. I just think that's worth knowing and worth questioning. At least, come on. The highest vaccinated country per capita now has the most COVID cases per capita. I got no more words for that because I think YouTube or Instagram will take me down if I say anything else about that. So before we get into some of the other news articles, like I said, I want to talk about Canada. I want to talk about the Afghan refugee crisis. Before we get into that, I want to go over to the Forex side of things and start to work through the pairs that we're looking at this morning. The main focus for me this morning has been GBP CAD and Euro AUD. So let's start with Euro AUD. Euro AUD, as you can see, moved lower overnight out of the Asian session here, breaking under this blue box. The blue box is actually yesterday's low, boxed off right here, that support zone. So we had a pretty nice move down yesterday out of the Asian session, again, breaking through that support level here at 1.6117, 1.612, somewhere around there, right? It's always a zone. It's never an exact price. Keep that in mind. So we break that zone. We hit our max average daily range here of 82 pips in that push to start the London session. That's feeding that market sentiment bias here, right? See how it's perfect in that sell zone under the 50 value here, under that dotted line. So this is clearly saying to be short biased. Yesterday's price action tells me mainly to be short biased. It finished the day red yesterday, finished the day down. EMAs here are short. So naturally, we're going to keep that trend and look for shorts today. I love that it's come back to that zone, also to the 50 EMA, because when we break a zone, I normally like a retest of the zone before we get another leg down. Market sentiment feeds the shorts. Like I said, EMAs feed the shorts. What we're looking at here is what we call a D1 entry. So on the D1 entry, we're not using the 15-minute candle formations to identify when we should take the trade. We're entering on the 1-minute chart, but we're using the 15-minute chart, as I just did, to give you the trend, to find the level to trade off of in the direction of overall trend. So now we're coming off the 50 EMA. I like as well here, this is separate from what we saw last week and yesterday. The market sentiment is bearish, and also look at how it holds the downshift. It tries to shift back up, crossing the 8 over the 21 EMA right there, but it does not. The 8 stays under the 21 EMA, still holding the downshift, still telling me that short term, we are in a downtrend. So if we now take this to the 1 minute, you'll see where the entry comes and how this sets up as a D1 entry. Your divergence is set here from 530 into 630. See how the RSI is falling, price action is rising, so that's your top. It then makes a lower high here, coming through the 50 EMA with the market sentiment line, the yellow line on the 1 minute, in the sell zone. So we have a bearish market sentiment. We have a price action structure now feeding that short bias. And with the market sentiment holding under the 50 value, with this yellow line holding under this dotted line right here, that's the 50 value. With it holding in that sell zone, we expect this to continue lower as the morning goes on, at least until it hits low of day or until this market sentiment line comes back up here into the buy zone. So I think this is a D1 here. Clearly, it's a D1 in play. And I know some of the guys in the group chat are making money on this. It's a really nice setup. I'm very happy for the guys that were in this, that are in this. I wish I could be in it with you, but I can't enter it now. I was getting ready for the stream when it presented this morning, so I don't have a position here, but this is definitely a good trade to have for your markups. Win or lose, this is a D1 entry. Remember, we don't know the outcomes, so we're just looking at trade setups that fit the rules of the system. So that's Euro AUD. Very similar here on GBP CAD. The difference here with GBP CAD, and this is kind of what kept me out, this is one of the reasons, I'll explain them all to you here. If you box off yesterday's low, what did we do to it already today? Found resistance to it and bounced off of it. So anytime we're looking to trade short now towards that zone, because we are not underneath it, it's going to potentially be resistance for us to push off of, support to push off of. On top of that, if you go back to Monday and we box off Monday's low, just to give you the other zone here, what else do you see? Now you see yesterday and today, it has issues getting through this zone at the bottom. So even though market sentiment is very bearish today, it's a swapping market sentiment line to start the day, but overall bearish, you still have these price action zones in your way, which is why I have not taken a position on this yet. I still think I would consider taking a position on it if it's set up with good risk reward, but comparing this to Euro AUD, you don't have any resistance or support zones below Euro AUD. So to me, that's a better trade setup than this on GCAD. On top of that, market sentiment, as you can see from the start of the day here, is perfect in the sell zone all day. This being oversold doesn't bother me that much. It's a small knock. GCAD, you have to be unbiased with it. Market sentiment is swapping. So naturally, because the market sentiment starts the day in the buy zone and then drops into the sell zone, that's going to tell me that this is going to be a little bit of a choppier trade. Even if it does end up moving down overall, it'll still end up being a little bit choppier because that market sentiment line could be better. Okay? That's what we're looking at here on GCAD. If I show you the 1 minute on GCAD, it looks very similar, as you can see, to Euro AUD. You've got the divergence on top from 4:30 to 5:30, a little bit earlier. The top is set, tested multiple times. We start to make higher lows, pulling the 1 minute liquid 50 into the sell zone here. That's where we look to see potential, spots for entry, either here or here at 7:30, as that market sentiment line is in the sell zone now. Now, as it's starting to pull back up towards the buy zone, because you're trading a swapping liquid 50, I would not get scared if I was in this coming into the buy zone. I'd be more focused on the 15-minute here to just see it hold the 8 and 21 EMAs. The 8 and 21 EMAs are crossed down, so this should continue lower from where it stands now. Now, of course, that can change, and then you have to make adjustments, but that's what I would be watching more so than the 1 minute liquid 50. If you're in ASFX, you'll know what I'm saying, because you're trading a swapping 15-minute liquid 50. So the 1 minute liquid 50 is going to be a little bit choppier comparative to something like Euro AUD, where the 15-minute liquid 50 is perfect. Okay? I see a lot of questions in the chat. I appreciate everybody giving some info here, throwing their feedback. I'm going to get to the questions in a second. Let me finish my analysis. Now we've got a D2 entry in play here on GBP NZD. I know Austin Mendoza's crushing this trade this morning, so this is good stuff. You're looking at 1.8 R, almost 2 R risk reward to the 200 EMA. On the break of the 50 EMA with divergence like this is called bullish divergence because the RSI is rising. That gives us a bottom and a level to trade off of to see it go from the 50, the blue EMA, up to the 200 EMA. If it breaks the 200 with a body, it could rise towards the 800 EMA, which is above it. What I typically like to see is more of a second break of the 50. I like to see it come through it to the downside again, and then I like to trade here because then instead of having my stop at the bottom here, my stop would go right here. So it's not a D2 that I love, but it is a D2 entry according to the system because of the 50 EMA breaks. You've got 1, 2, 3. This is the third 50 EMA break so far today. So I think it is significant enough that you could expect it to hold the 8 EMA and continue up to the 200. It just takes some time. Each bar is 15 minutes. So you just got to be patient. As long as it's holding that 8 EMA, once you're in a trade like this, ignore the 50. Watch it hold the 8. If it breaks down through the 8, that's a bad sign for your long trades. And now I wanted to show you GBP USD last night. Really solid A1 entry. It's a 2-candle formation. You're trading towards the 800 EMA, but I love the TDI value here. I love the market sentiment falling. Price action moved lower yesterday, so you're kind of riding that trend from yesterday. The only thing in your way really is the 800 EMA. But what does it do with the next bar? It bodies right through it, holding the 8 EMA. Whenever you trade an A1 2-candle formation like that with that proper RSI value, the next bar should continue in the direction that you're trading. For this trade, it should continue to the downside, and it does exactly that. So this was a nice little 2.1 R trade that I have marked up. I wanted to make sure you guys saw that because here, even in the Asian range, trading a pound-dollar pair, still opportunity to make money last night. So if you're an Asian range trader, there are still entries like this. I don't think you're going to get a 5R, 4R runner in the Asian range, but 2R, absolutely. 1R, for sure. So I think that this is a good trade to mark up and put into your back testing so you can keep a fresh mind on this and identify it potentially if you're an Asian range trader going forward. So that's everything that I've got on the watch list this morning. I can go through the other pairs if you want to know why they didn't make the list. For example, like GBP AUD is oversold, not a big deal. Market sentiment is good, but it maxed out its average daily range. So I'm not too interested in that. That could have made the list, but with the max ADR, not really doing anything. GBP CHF coming off the 50 EMA really well, but market sentiment was not conducive to longs here. So that's why I did not have this on the list today. We still have 2 swing trades in play. Euro JPY, Euro NZD. This is Euro NZD. Into yesterday, you can see it's now 140 pips at most, risking about 25. And Euro JPY, as you can see, pulled back yesterday, but now is continuing higher, about 75, 76 pips, 78 pips from the entry on Monday. So 2 swing trades in play as well. If you're a